Yo, 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 what up, everybody? Froggy Stocks here. Nothing I say is financial advice. Entertainment purposes only. TMF. Yes. Yields are dipping. TMF is ripping. That's what we want, but also in tune with the unfortunate circumstances in the Middle East. Just happening, the Israel and Palestine conflict right now, where Hamas had attacked Israel. This is going to affect the market in general. And I put a tweet out just a couple days ago saying, well, BlackRock must be ready to crash the market because we have another conflict starting up. And in my opinion, there are credible sources linking BlackRock and multiple other financial institutions to global events that lead to war or conflict. So, military industrial complex defense stocks rocketed up today. But the main thing that we're going to talk about is TMF and TLT. TMF, daily 20-year Treasury Bull 3X ETF. We've been talking about this for months. A lot of the DD I get directly or got from the initial DD from Stockmo. And you guys, I've told you to go to his channel and check it out. He was early in the game, but he's calling it right. You know, it's just like the whole Big Short Michael Burry thing. You know, being early is not the same thing as being wrong. Being early just means you keyed up to the information quick. Luckily, I got a tip on it, came in, did my own DD on the backside, and realized, hey, why does it look like with a $5 billion all-time high treasury short position, while Michael Burry is shorting the U.S. stock market or buying puts on the U.S. stock market valued at over 1.6 billion, why do they have TMF so close to $4? And I told everybody, I don't think they're going below 4 because they don't want to mess with listing requirements. Somebody's being extremely greedy. Somebody is being massively greedy in the stock market and in the bond market. They want to have their cake and eat it too and play both sides, and it's not going to work out for them. Now, Bill Ackman has been pushing, and he's been correct on this treasury bond short. But as TMF started picking up in the Twitter sphere and more people started talking about it, Bill Ackman comes out and says, no, we're staying short treasuries. We're going to 5.5%. These guys, these big money guys, have a history of telling you, hey, we're shorting this until 5.5% as they cover at 5. This is how big money works. Anything they say, I take 30% off. We were buying this from 550, and I bought the dip last week down at 405. I have an awesome position in this. Today we ran over 7% into after hours, which is absolutely amazing, but only after we got the news. And today the bond market's actually closed, but only after we got the news. And I want to thank, where's he at here? Well, I retweeted. Here it is. Swordfish Vegetable posting some very good stuff along with bar chart too. 10-year yields are down 10 basis points. Bonds are closed, yes, but futures are open. And those are still accurate. This is a significant move. Look at this move from 485. I mean, we were at 486, 485 on the 10-year, down to 4706. That is a huge move on a future in a day, and we won't know what's going to go on until tomorrow. It may recover a little bit. TMF may pull back a couple percent, or this completes the move and TMF shoots up another 7 to 10%, which would be absolutely amazing. But if you look at the daily, there is nothing but gaps on this thing all the way up. I had them all marked out and I took them down because there's too many. There's gaps from 4 all the way up to 30. And it's absolutely ripe for the picking right now. And it blows my mind that all these squeeze people, all these meme stock people, everybody that's talking about squeeze this, squeeze that, this is the easiest play of the century. It's bonds, unless the government defaults and something radical happens like nuclear war or something. And even if that does happen, the worst thing that could happen is the government defaults. But if we go into any type of crazy war, World War III, somebody's assassinated, all of the bad things you can think about, people will leave the stock market and dive into treasury bonds, buying them up, meaning yields will come down and bond values will come up. And when that happens, TMF is 3 times anything that moves. This could squeeze out massively, seeing as reported, there is over a $500 billion short position on US Treasuries or more. That's just what's reported. So, in my opinion, a lot of hedge funds were upside down on meme stocks, way upside down on meme stocks. How do you get out of it? Housing's crashing. Banks are getting ready to take a tumble. Lots of hedge funds operate under umbrella of these banks. And the meme stock frenzy was never taken care of on the back of 2008 never being taken care of. Now we have all-time high real estate prices inflated, all-time high interest rates on houses in the past 30 years, all-time high consumer credit usage and defaults coming in on defaults. 90-day delinquency on car loans going through the roof. 90-day delinquency on home loans going through the roof. Commercial real estate is overvalued in a mess. Inner cities are crumbling on top of each other. The market is overinflated. Tech stocks are overinflated, in my opinion. Where do people go when everything's overinflated and they're pumping markets for exit liquidity, which we saw on the SPY? Where do they go? They go into treasuries. When the yields dip, TMF will rip. I'm absolutely super excited about this. It looks like we got in just at the right time. I think we are in a good reversal. I think this signaled reversal back here at 405, and we've done nothing but climb since that day, even if when all the bad news came out, because when bad news hits, people want to go into bonds because it's safe. The Treasury is going to back it up. You're going to earn 4.5% to 5% right now. People want to lock that in. And as they buy, the yields will come down, the bond values will go up, and TLT and TMF will start to go up, back, and gap fill. And when that happens, shorts don't want to be stuck this thing. They're going to want to cover and get out and play the other side of the market. And this isn't a meme stock single company CEO running this thing. This is the US Treasury, and these are huge ETFs on the markets that people play every day, that people put billions and billions of dollars into. Adam Aaron can't come out and ruin this one for you. Bottom line, influencers can't come out and ruin this one for you. This is either you're buying long on bonds, hoping for either a recovery or a squeeze, and as you wait, you're earning a 5-cent dividend per quarter. I believe there's a 2% maintenance fee on this thing, but it's not going to matter once you get all your dividends. And say this goes back to 30, we're talking 400 or 500%. That's incredible. Even here at this gap fill at 11, I would almost 200% my money while I wait 12 months, even if it takes that long. This thing may come back up and shoot back over the $5 to $5 to $10 range in the next couple months. And everybody should realize too, when bonds start to value back up and treasury yields come down, that is a signal of recession, meaning people are going to want to come out of the stock market, take exit liquidity, put it into safer ventures. On the backside of hedge funds shorting treasuries at all-time highs, over $500 billion, asset managers have been loading the boat on treasuries to play it safe and to get a guaranteed return of investment. So, I don't know, guys. If you're not in this one, I don't have to tell you. I'm not telling you to get in, but we've been saying buy since 550, all the way down to 405. We got the reversal today, in my opinion, signaling very good. RSI on the daily still through the floor. MACD's flipping back up. It looks like this thing may recover back over 550 in the next couple months. And if bad news keeps coming out, inflation starts to taper. I mean, inflation's creeping at its high point. If it starts to kind of just get entrenched, then you could be looking at rate cuts, which they hinted at for next year. Then they said rate hikes. Then they said no cuts. Then they blah, blah, blah. They're trying to scare everybody in the market. I think they're going to have to do an emergency rate cut by December just so people can go shopping for Christmas, because when the bank earnings come in and the consumer earnings come in on home goods and toys and crap like that, it's going to be freaking abysmal this Christmas because everyone is broke. That's the bottom line. The majority of the consumer base in America is broke right now and running credit through the roof. So, one, this signals recession, in my opinion. We're going to have to go through a recession to get back out of this super high interest rate super high credit usage yield where chicken and everything in life costs way too much. And I forgot I'm cooking chicken right now. But recession, then people are going to leave the stock market because of uncertainty, because war, global war is basically what we're coming into. Global war, and uncertainty in the U.S. stock market, considering everything's so inflated, blah, blah, blah. So you got that. So you got recession, war. Then you have super high interest rates that need to come down, or the housing market's probably going to collapse because we all see what's going on there. Home loans have fallen off like freaking crazy. Commercial real estate's fallen off like crazy, and builds are falling off like crazy. So we got to do something. We got to get people back out spending money. We got to get people back to work. We got to get the economy rolling again. The best way to do that is what they're doing now. They've ran interest rates up. Inflation's through the roof. Everything's super expensive. Everybody's going back to work. And then what they're going to do is they're going to put the brakes on the rate hikes. They're going to come out, they're going to say, hey, let's start cutting rates. People are back to work. The unemployment's getting better through Christmas. Let's let people go shopping again, take out a couple home loans, maybe get a new car, blah, blah, blah. And then suddenly, as the market starts coming down because of that, at post-December, because we are now in a recession, which is going to take time to recover, you're going to have bond values go up, yields are going to drop, TMF is going to rip. TMF will rip when bond yields dip. It's just that simple. What an easy play. 5 cents a share, as long as you want to hold it. There's a 2% maintenance fee, I believe, on it. But if this thing is going to run back to the $10 to $20 range on its own, that's a couple 100%. That's well worth the wait in the 12-month hold for your tax return. If the $500 billion in hedge fund shorts get trapped in this thing, and this thing rips $10, $15 range in the next 6 months, then boom, they're short, and they could get squeezed. As people load up on bonds, because bond values are going to go through the roof, they get squeezed out. They cover their shorts. You got a $500 billion short position. This thing rips up $30 to $55 range, and boom, you're up 600%. You can cash out with your 12 months capital gains tax deduction. So super excited about it, guys. It was a great day today. I do believe this is the reversal. If we can hold the trend line on this thing and keep creeping up, I think everybody's going to be really happy with it. There's a lot of folks starting to talk about it now, as you can see on Twitter. Please follow Swordfish Vegetable for sure, and follow Bar Chart, and make sure you go follow Stockmo on YouTube as well. He's the one that I believe called it more or less first. Somebody came into my chat, teed me up on it, and then I seen he was talking about it. And everything he said, I totally jived with. We just got in a little later, but I think he's right on the ball with this one. It's going to be crazy. Yo, what up, Spence? I finally got a notification from your live, probably because the market is closed. Probably. And it's probably because I haven't been online as much. So, very interesting. Either way, let me caption this real quick. TMF up over 7% through after hours today, after we get reports that U.S. Treasuries, even though this is the 10-year, U.S. bond 10-year yield dropped significantly today, even though the bond market is closed. This is futures. So tomorrow, if this thing holds, or let's just say tomorrow it recovers a little bit because it was such a radical day, but in the next couple of weeks, if this thing starts to dip more and we get back down in the 4.5, 4.25 ranges, it looks like TMF is going to be right back to the $5 to $7 range. And like I said, if shorts start to cover there, they're going to buy long, and then they're going to cover their short, and they're going to ride the bonds up, and who knows where this thing can go. I'm going to take an exit at anything from 300 to 500%, collect my dividend. Hopefully, I get the 12-month hold for the tax deduction. But if I don't, that's okay. This is one of the easiest plays I've ever seen, and it blows my mind that the meme stock people are not on this thing. All the people screaming AMC and GME and Lucid and blah, 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 blah. This is simple. Biggest short position in history. 12-month hold, 5-cent dividend per share per quarter. Largest short position in history. The bonds are already starting to value up because the yields are going down because of global uncertainty and war and inflation, economy, and the stock market. So super excited. Do you think it's time to buy back into AMC? Absolutely not. I'm not touching AMC with a 10-foot pole. And I don't know why anyone would when this plays right in front of you. I really don't. AMC is, Adam Aaron is going to do everything he can to destroy you. TMF, largest short position in history. No CEO to mess up any plans. No CEO to give the squeeze back to the shorts. They are in this. This is bonds. This is the US Treasury. This is ETFs. This is the NYSE. Nobody can come in and mess it up. If shorts get pinched on this one, they are toast. And along with that, a bunch of banks will go with them. So, again, this is my play. I'm still on Hawaiian Electric. We had a good day on that today. It looked like it signaled reversal finally too. I considered selling a little bit of it to get more TMF, but I am pretty heavy on TMF already, so I'm not going to be greedy. I'm going to sit and wait. Space creeping back up a little today too after another successful space flight on the 5th out of New Mexico. So either way, wanted to drop this real quick for you guys. Please like the video. I'm going to try to do more videos on TMF as we get further into time. I'm not going to do a video every single day like everybody else does because I'm not here for the monetization only. I only want to do this when I got really important things to say about TMF. And today, this is important. U.S. government bond 10-year yield dropped significantly. Suddenly, TMF and TLT start skyrocketing. If this gets any worse, shorts will cover the bonds, and you'll see TMF and TLT rocket up as shorts get pinched in the bond market. I don't know why they decided to short this at an all-time high. Absolutely crazy. Either way, you guys have a great evening. I'll do any updates that I get through the night, through the week, whatever's going on as a YouTube short if I find anything important. Other than that, I'll try to stream 10, 15 minutes in the morning, see if there's any news. We'll check the market. But again, today, the bond market was closed. Tomorrow it will open. And if this opens up significantly down, TMF could take a run tomorrow. So either way, you guys take care. Have a good evening. Froggy Stomachs out.